Thank you.
All right, welcome back. If you've watched part 1, you already know we don't sugarcoat things around here. Now we're tackling first-time homebuyer programs, grants, and interest rates. You've probably heard of get a home for 0 down, rates are going up, act now, and special programs to help you buy. But what's real and what's just sales talk? Nikkie's breaking it all down today so you know exactly what's legit and what's just marketing BS. So let's get into it. Okay, Nikkie, tell me about first-time homebuyer programs or any grants or anything that's available to them.
Sure. So as I mentioned previously, we do have a 0 down program for first-time homebuyers. We also have the minimum 3% down for first-time homebuyers for a conventional loan. There are some grants available if you live in certain zip codes that can give you about $5,000 towards down payment and closing costs. And sometimes we have some Florida-specific programs that come out as well, some bond programs and so forth. Those you have to work with a certain lender that actually is qualified to offer that program though. So at this time, I don't have that, but I've heard that they're kind of hard to work with and hard to qualify for, but it is an option out there in the state of Florida. We also have Hometown Heroes that comes out every year, and that's a great program as well for first-time homebuyers. So you have to be employed in the state of Florida, and your actually job location has to be based in Florida. So some of the larger companies that may be a little harder to qualify for because it could be a company based in, Washington State, and that wouldn't qualify unless you had an office address in Florida.
So the employer
has to be in Florida with a local address
to get qualified for that loan.
Yes, correct.
And interesting about these down payment assistance programs and also these grants that are available and these other down payment assistance, a lot of times it's a second mortgage.
Yes.
Can you share, the difference between, if it's forgiven or it's for the life of the loan, and explain that a little bit?
Yes. So some of these down payment assistance programs, as you're researching them, a lot of them, as Tamily said, do come with a second mortgage. So what that means is your first mortgage will be like the 3.5% down, as I mentioned, that we can give as the 0 down, because basically the program's covering your 3.5% down payment. Now, the other 1.5% can be also part of that to give you a full 5% down. Now, whether you do the 3.5% down just for the down payment portion, or you want to include the extra 1.5% to cover some of your closing costs, is the 5%. That entire portion is considered a second mortgage. So you'll have your first mortgage that's going to cover the loan amount, and that is going to be, say, an interest rate for FHA about 6.5%. Your second mortgage, whether you take the 3.5% or 5% assistance, is going to be, I'm just going to say, about $12,000 that you could be borrowing, okay? That is considered a second mortgage, and most of the time it's going to be included as a payment in your monthly mortgage, okay? So you won't have 2 separate loans. It's all going to be one loan. The second mortgage rate, though, is at 9.99%, and you're making payments on that $12,000 as an example, and it's basically you pay on it each month, and if it's not paid off in 10 years for the program that I offer, then you owe that as a lump sum. Also, you cannot refinance, sell the home, or change ownership of the home. If you do, then that $12,000 that you borrowed becomes due and payable as a balloon note.
Okay. So it's important to understand these options. So when you're looking for down payment assistance or grants, if that loan is going to be there until it gets paid back with your monthly payments, or if you do decide to refi or sell, that it will be due once that new note is made.
Correct. And then also some of them do have a forgivable option. The forgivable option for the FHA product that I have is 5 years. So if you make on-time payments for 5 years of your first mortgage, there's no monthly mortgage due on that second mortgage. But you make 5 years, 60 months of continual on-time payments, then that loan is forgiven in 5 years. So that option is forgivable. Again, you cannot sell, refinance, change ownership of the home, or that becomes due and payable before the 5 years. At the end of the 5 years, that just goes away. It's forgivable. At that point, you can move on and do what you'd like with the property. That one does come with a higher interest rate though. So they kind of hit you for, the forgivable part. Some of my buyers like to do the repayable option, which has a lower interest rate for the second mortgage, and they're making very small payments on that throughout the term of the loan.
So again, super important to have these conversations with your lender just to see what your options are, because let's say if this is your first time home, as we know, our family dynamics change, we grow, we need to sell that property and get into something. You need to really calculate how long you're going to be at that property to see which one's going to be the best fit for you.
Correct.
And that's the perfect transition to our next topic, which if you are that buyer that purchased that home, your first time home in that 400 price range, and now you're looking to sell because your family changed and it grew, and now you're looking at a home that's over 800, there are different loan programs available to you, and if you could share some insight on what they are and what we need.
Yeah, so we have jumbo loans. So basically what that means is if you are purchasing a home and you need a loan for anything greater than $806,500, it's considered a jumbo loan. Now, I can tell you, you need to keep in mind that that is not the purchase price, that would be the loan amount. So any loan amount that's going to be over that $806,500 is considered a jumbo loan. There's different qualifications that you need to meet in the jumbo loan world, yes. So the minimum credit score is 700 for those. And your debt to income ratio is going to depend greatly on what your actual credit score is as well. So typically a jumbo loan can go as high as 43% for debt to income ratio. And if your a little bit credit score is on the lower end of the things, so probably that 700, you're going to have to meet about a 35% debt to income ratio. So it's a little tighter. They want to make sure that it's not a risky loan at all. So they need to make sure if they're lending you, the $806,500, that you're going to be very well qualified to make those payments and not default on the loan. Another thing to keep in mind is if you're self-employed, there's some tighter restrictions as well if you're looking into a jumbo loan.
Awesome. Yeah. And talking about self-employed, I know that that's also a hot topic. What are some qualifications when we're looking, and this is for any purchase amount, when you are self-employed, when you're looking to get approved for a loan?
So self-employed, that's a whole different ballgame as far as qualifying. It's not difficult to do as long as you have all your paperwork in order. So we will use the last 2 years of your tax returns, and we will take your net income, and then we divide it by 24 months. So basically you give me 2 years of your tax returns, we combine your net income, we divide that by 24 months, and we use that as your monthly income. Some things can be brought back into the loan. So if there's any, some of your write-offs and so forth, depreciation, we can write back in to qualify you for the loan as far as income goes. But it's basically 2 years tax returns. And if you were in the middle of the year, so say now we're in 2025 and we start going through the year, we're also going to want 2025 P&Ls and balance sheets as well, just to make sure that your business is on track to do what you were doing in the previous years.
Awesome. So you can still qualify, but just know there's some additional paperwork, and we got to make sure that you have all that lined up and ready to go for you to buy.
Yes, and also if you are having a hard time qualifying with your tax returns, because a lot of businesses do write off pretty much everything and their net incomes end up being very low. But if you have substantial amount in your bank accounts, then we can do an asset depletion loan for you. So we can take a look at your assets, your bank statements, and qualify you for a loan that way and not even bring more income into it.
That's a great
So we have a lot of options.
That's awesome to hear. Thank you so much for all of your help today. This has been super insightful. And if you could let us know where we can find you, and if you have any questions or need some one-on-one time to see what's your next move, call Nikki.
Yep, so my direct line is 614-747-6149. My email is Nikkie, Nikkie, @unityhomeloans.com.
Awesome. Thank you so much.
All right, thank you.
Today. That's the real deal on first-time home buyer programs and interest rates. Now in part 3, we're diving into something that can save you or cost you thousands. Interest rates, fees, and the true price breakdown of getting a mortgage. If you want to make sure you're not overpaying, do yourself a favor, connect with us, hit subscribe, hit the notification button, drop a comment, and let's make sure you're informed about getting the best deal possible. See you in part 3.